Jorge Montepeque to kick us off, president and founder of Global Markets. Let's start in the heart of the market, the oil price. Jorge, locked in solid at above $95 on the close on Friday. OPEC Plus has done its job and they have secured that $90+ floor. Your thoughts on the OPEC Plus piece, the oil policy, oil producers forcing, securing, demanding a $90 oil price in this moment of when the world is looking at a global recession?
Yeah, I think OPEC has done what it has to do for itself. And Saudi Arabia has indicated very clearly that its policies are aimed for its citizens, not for some of the country's citizens. So OPEC is following a path where it's helping itself. And I can understand that philosophy that help starts at home. And it is very clear, I think, for all of us that economic activity globally is suffering from a combination of post-COVID effect and primarily because of the war. Hence, a recession is looking at us as inflation has increased, too much money printing, and therefore demand is coming down in key sectors. And OPEC has done exactly what I expected them to do. I think the net is not the headline number of 2 million barrels a day, much less than that, but they need that signal. They defended the $90 floor. I have had meetings with some people in the industry, and they reminded me that the budget for Saudi Arabia is not at 70. It's not even at 80. It's around 85 or 87, I think is the number for them. So they need to look at that number. And switching a little bit to Russia, they have issued a number that I think is 78 for next year. I think they're being realistic that they don't achieve the number most of the other sellers do. But any responsible producer right now within OPEC has to be looking at cut. Obviously, in the private sector, no one should do that because their fiduciary duty is to maximize profit for their shareholders. And I think we'll see more of a growth in the West. But within OPEC, they will be very cautious in how they move forward for the next year.
Jorge, you mentioned there earlier that it is the fiduciary duty of the private IOC, International Oil Company, to maximize profits and return it to investors and so forth. But within the context of that, of the timing, you know, there's clearly the optics. I mean, from the point of view of long-term license to operate, long-term fiduciary duty, the optics of redistributing $30 billion of profit while people are literally putting on double sweaters. I mean, is that wise? Is there a consequence, do you think, from the private sector side to somewhat be in defiance of major policymakers? The states are reluctant to put that windfall tax in place, but my goodness, they must be increasingly tempted to do so given the defiance of the industry. Your thoughts?
Yeah, the returns that Exxon had were stellar, close to 20 billion, right? But they have also faced the inverse during COVID, where they were losing tens of billions by similar amounts. I didn't hear anybody crying, we need to subsidize Exxon and make sure
that may be money. True, but right? There's no doubt. But what's
true.
The consequence? I mean, my sense is this could accelerate policy making that would be quite detrimental.
Policy making, I have something very important to say. Policy making is schizophrenic. You have an administration that says, don't invest in oil. We're going to eliminate carbon. So if you listen to the policymakers and you don't do that, then you have no oil and you have no energy. Then later on, the administration says, whatever you're producing, sell it to us very cheaply for our consumers. So they're happy. So if you do that, demand is going to grow. So if you're not investing in production and you expect the product to be cheap, then demand is going to grow. It's totally schizophrenic. It makes absolutely no sense. How can you have investors with stability when you have an administration that talks against its own economics, against the interests of the country? That makes no sense.
The fact that there's no Iran deal, is there a consequence? Iran apparently is on the doorstep of developing a nuclear weapon, weeks away, we were told. So is there no consequence to Washington and Riyadh sort of throwing fairly acidy barbs at each other? I mean, that's where I'm really getting at. And obviously in both of those instances, there's critical energy supplies that the world needs.
What I would like to say is there are no consequences because the world carries on. Iran is exporting oil. Russia is exporting oil. Consumer countries are importing oil. Germany is burning more carbon, is trying to do more nuclear plants. Everybody is doing what they have to do because they have to provide to their citizens. So they're finding ways around it. Europe has bought more energy and paid for more energy this year than last year because they have to from Russia.
All right, I'd welcome your thoughts. Just looking to the fundamentals over the towards the end of the year now, the last 2 months, supply and demand, basic fundamentals. How tight is this market?
Yeah, the oil market has been producing and consuming about 100 million barrels a day. If Europe decides to really tighten up all the purchasing from Russia and eliminate it, it will need to buy from somewhere else, punishing itself with higher freight and punishing others who will have to buy from Russia and also having more freight. But the net effect is the world will be consuming and producing about 100 million barrels a day. Nothing will change other than more cost to everybody. So going forward,
more discounted oil into Asia won't change the volumes, but maybe it'll allow Asian countries enjoy a discount.
Yes, and they are. India is doing that. China is doing that. India is now roughly buying close to 25% of its needs from Russia, and that will continue. They're very clear. They need to have energy for their country. So what the world has done is put in grit or sand into the normal trading process by creating longer voyages. People are buying not quite the crude they want, and that results in a higher cost. So you're paying more for the energy than you should have because of the sanctions. So am I. So is everybody that is listening to this phone call. All this grit creates a higher cost. So oil prices are higher than what they would be. And we're still facing next year an easing in China's COVID policy. At some point, they're going to get tired of doing what the rest of the world is not doing.
Given this sort of shift from, I welcome your takeaways. Obviously, you were in Singapore throughout the period of the Chinese Congress and APEC and all of that. Given the reformatting of the Chinese government's focus, are we close to peak oil demand in China?
No, I don't think so. There's three significant things happening with China. One is the Cold War by the US. We have a chip war at the moment, and the US designated China the biggest threat for them. So there is some serious friction underneath where the US is trying to slow down China. Number two, the strategic, and Rad phrased it well, the strategic union of Russia and China is happening really fast. And Russia has all of the primary inputs that China may need for its industrialization and commercial activities, everything. Energy, metals, coal, anything they want. So that is going to deepen. But the difficulty thing is with Xi's policies. He's a socialist, like most of Europe and now America is. So he's also slowing down China. So I don't think we're going to see the growth we formerly saw in China until Xi or his successor reverses those policies. But there is no peak oil. They are still growing. It's just at a much slower pace than they used to be.
Jorge, just to quickly follow up on that, given that you were in Asia recently and spent a lot of time in Singapore, how do you think this Congress was received in Asia? Does it bring the Asian countries, the Philippines, Vietnam, the South Korea, obviously, closer to America, farther? Where does it play into that space, do you think?
Well, a lot of the commercial sector in Singapore is very afraid of the sanctions and the impact to their business. And a lot of the business is now shifting very rapidly to Hong Kong, because Hong Kong and China are essentially the same country, as we know. And China is very commercial in international trade, and Hong Kong, therefore, is taking that point of view of further opening. But in Asia, as you have seen, there are two big clients of the US, South Korea and Japan. And they are very, very closely aligned with the US, but even South Korea started to change because they were going to send weapons to Ukraine, but announced this past week that what they're sending is humanitarian aid only, because Russia threatened them that they wouldn't supply, Russia wouldn't supply oil and those primary commodities South Korea wants. The other countries, and I spoke to some of them, they're a little bit more reluctant, almost like humoring the US while doing what they have to do. That's why my position has been no change, because at the end of the day, Indonesia needs energy and they're buying it. Thailand needs energy and they're buying it. And they're seeing really clearly the example provided by India. I think India was here the deal breaker, not China. Everybody expects China to do what they do individually, but they didn't expect India to be so forthcoming and open about the fact that we're buying Russian oil and we will continue to do so. And everybody's saying on the sidelines, we will do it too, but quietly.